Hello, everybody. It's Thursday night, time for another episode of That Crypto Show Live. My name is Dirk Hartig. Welcome to today's live stream. Happy to see so many of you participating there already. Great to see everybody here. Tonight, we want to talk, of course, how could it be? Otherwise, we wouldn't be a trading academy, about trading. And we want to concentrate on something that not only I call it, it's called volatility, because I think it's one of the most underestimated things to have a look on, to monitor when you not only start trading. Actually, I see a lot of traders that have progressed already in their journey to becoming a professional trader, to live off trading, that they are neglecting that. So we want to have a look at that tonight, and I'm going to show you some tricks, how I do that, how I identify what type of volatility setting we are in at the moment, and what that means then for my day trading strategies. And yeah, talking about day trading, this is definitely going to be today a live stream that is more for everybody who likes to day trade. So volatility is something you especially have to monitor if you are trading on shorter time frames. So we are going to concentrate today on this live stream on maybe 5-minute charts, 50-minute charts. Everything here you're learning today, you can also apply, of course, to 1-minute charts, or even, if you wish to do that, lower time frames. My God, it's so crazy hot here at the moment. Really, it's like 7 o'clock in the evening, and we still have over 35 degrees here. Really, really crazy climate change at its best, I would say. So we have a special sweepstake going on today. So if you are watching this today, this live stream, and you wish to ask a question, there was never a better time to do so. So you can just use the YouTube chat function here to ask your question. And with all the questions asked there, we'll give away $50 in trading bonus randomly to everybody who asks a question here. Of course, the question needs to be related to trading. So maybe you don't ask me like, why don't I have hair anymore or something like this? Just kidding. So of course it needs to be related to the topic of this webinar. So for in relationship to volatility or trading cryptocurrencies. At the end of this webinar, of course, I'm going to try to take my sweet time here to answer as many questions as possible as well. And if you are ready to start trading, you will find everything that you need in the description of this video to open a trading account with our sponsor here, PrimeXBT.com. And they really have a special thing for us going here, because this is really something today, I think, for the scalpers out there. So for everybody that wants to trade on a lower time frame, if you use the promo code THEROOM, you will get a 50% discount on the already, well, very low trading fees that PrimeXBT is offering anyway. So that means that instead of 0.05% for a Bitcoin in trade, you will only pay 0.025%. And when you are on the lower time frame, that really can make the difference. If you are trading more on the higher time frame, you might want to use the promo code Trading Academy, because there you will get up to $7,000 in bonus. And if you are super smart and really want to know it, you can also, of course, combine those promo codes, but you don't know this from me. All right, let's jump into it. So today we are talking about volatility, and volatility is something, like I said in the beginning here, that in my opinion, most traders out there don't really have on their screen so much. So let's maybe start first with, what does volatility mean? What is volatility? Well, volatility is, first of all, something you probably read about every day when you are scanning through news about trading, about what happened with your altcoin, what happened with Bitcoin, what happened with, whatever asset you're invested in at the moment. But by the end of the day, it just means how much an asset through a defined period of time swings to the upside or downside. And I'm working here with TradingView again today. So you can find a technical indicator there called average true range. So just go on indicators up here, type in average true range, and then you will find an indicator which will show you smoothed over the last 14 days. Actually, I'm going to change this to a simple moving average here. Here we go. How much Bitcoin was swinging to the upside and downside on average per day over the course of the last day. Now, this is going to give you a hard number. Like in my example here, we can see, like on average at the moment, we can expect Bitcoin to go either to the upside, $1,170 US, or to the downside, $1,170 US. However, I prefer to use something here that gives me a percentage. And like with everything on TradingView, there are always people that already programmed something, so you don't need to do that yourself. Average true range percentage. So let's go with this one here. And this gentleman who programmed, or this person who programmed this average true range expresses what we are seeing up here for Bitcoin in percentage. And so I'm just going to close this one here because I think percentage is nicer to view. And we can see here over the course of the last 14 days per day, Bitcoin had a volatility of 5.6%. So it was 5.6% means swinging to the upside 5.6% and swinging to the downside 5.6%. Now, the question, of course, is that a lot? And how does that help us in day trading by the end of the day? And for that to answer, we, I think, need to have a look at more traditional markets. So if we, for example, take the S&P 500 here, to have a look how the average volatility was in the last 14 days, we can see it was 2.1%. And if we zoom out here a little bit, we actually see, actually the volatility is higher than on average if we look at the past year. You can see here, November, December, we were at 0.8%. So the average volatility of Bitcoin at the moment is more than twice as high as for the stock market. And you can go through every market here. So let's maybe take a currency here to have another market. So we have euro dollar here. For example, where we can see the average true range here in percentage is 1.1%, which, by the way, is crazy high for traditional currencies as well. If you would go like back 20 or maybe 30 years, you would have had average true range per day of maybe 0.1 or 0.2%. But nonetheless, we are at 1.1%. So this is like 1/5 of the volatility we are experiencing in Bitcoin. And if we see here at the moment, if we zoom out a little bit further and have a look like, okay, how does this Bitcoin volatility compare to what has been going on historically? We can see, we are not at the super low, which was maybe here at 1.8%, but we are also far from the super highs, which were like at 15%, or here in January 2018, even at 22%. So this is one reason why a lot of people, a lot of day traders, and I'm not only talking about beginner day traders here, I'm also talking about professionals, are attracted to cryptocurrencies and especially to Bitcoin because it offers liquidity. So especially in Bitcoin or Ethereum, you will get your trade executed at any time of a day, any day of a week. So absolutely no problem, maybe except you want to buy or sell like 100 million without moving the market. That's of course a whole different story. But in general, if we are just talking about 0.1, 1, 2, 3, 4, 5 Bitcoin, shouldn't be a problem, to execute those without moving the market. Plus, this type of volatility is going to guarantee us as well that we are actually getting chances throughout the day. And this is like one of the special things and one of the hard lessons, by the way, I had to learn myself. I remember back then when I was working at a bank and I just had my stockbrokers examination and I passed it, and I felt like I know it all and I'm going to get rich very quickly now, and my trades after this were a disaster until my boss back then came to me and said, well, Dirk, don't be afraid of volatility. Volatility is your friend as a trader. You want to have a certain amount of volatility if you want to day trade the market, because it gives you more chances of entries and exits from the market. And I want to show you exactly what I mean by this. So if we look here at Bitcoin, for example, today, and I've overlaid here. So this is a 5-minute candlestick chart of Bitcoin. I've overlaid here Bollinger Bands and my RSI hook strategy. If you don't know what I'm talking about here, RSI hook strategy, I think talked about this plenty in the past. So there's a video called Earn Easy $300 I think per day, which focuses on the strategy. So basically it's a momentum-based strategy where we want to wait until the price moves, and this is presented here by this RSI down here outside, either below 30 or above 70, and then the RSI is crossing some moving averages that are installed here. And you can see here today, for example, and remember, we are right now in a more not so high. It's not like particularly low, the trading environment at the moment, if we look in the past, but it's also, and maybe if I use here the crossing tool, it becomes more obvious. So it's not like super high. It's somewhere in the middle, actually. It's not too high. It's not too low, the volatility. It's somewhere in the middle. And in this type of condition, we can see like today, actually, there were 2 trades from this trading system, actually 3 trades. And the first one was here pretty early this morning at 5 o'clock CET. And then we had another one that occurred here, both actually pretty okay signals. So a couple of $100 US you could take with this. We just had not so great signal here. So this one I didn't trade actually, but if you could have. So we had in total like 3 or let's say 2.5 signals. Now, if we zoom out a little bit here and, for example, have a look at what the last time Bitcoin had like high volatility, which was here, very high volatility actually in June 2021. Let's see how this system did back then. So I scrolled back here to what is the 22nd of June 2022. That is now. No, that is something I didn't want. Sorry. Sorry, let me go again. Oh yeah, sorry. I chose this one because we went up here in volatility as well. So June 2022 as well. But of course, this goes as well for any other high volatility setting. So where the volatility was somewhere here between 9 and 11% per day, up and down swing. And what you can see here very clearly is that you had much more entries and exits from the scalping strategy. So there was one here, there was one here, there was one here. There were also some here, although probably those wouldn't have been traded. There was one here, and one here. So we are talking about 1, 2, 3. Going to leave this out. 4, 5, 6 signals in this case, in comparison to the 3 signals we had today, just because we have a lower volatility at the moment. And this is really, really crucial when you are trading, in my opinion. And this is a pattern you'll find on any market out there, that the higher the volatility is up to a certain point, that is, the more chances for scalping, for day trading, you probably are going to have throughout the day. This goes to a certain threshold. I remember back then, when we reached like very, very high levels of volatility. So like, for example, here in May 2021, where we were crazy, crazy high every day. And the market is just moving in one direction. So you have a very, very strong trending market that is just moving one direction. Of course, maybe those are the times where you think like, okay, I'm either going to trade with a trend, or I'm just going to stay at the sideline and not do anything for the moment. But in general, and this is the truth you'll find for every market out there, is the higher the volatility of a market is, the more chances from your day trading system you are going to have for entries. And really, we just need to compare here what happened around about a month ago on the daily time frame to what happened today. And you can see here, even today, we had a number of chances if we were patient enough. Now, there are a couple of strategies that you can adapt to this. You could, of course, say, you know what? In times of lower volatility, I'm going to lower my entry barriers. So I could, for example, say, instead of a signal occurring here above 70 or below 30, I'm going to move those barriers down to, let's say, maybe 60 and 40, so I can trade more. And this is very, very valid. This is valid, something you can do. Now, there is no really set in stone rule how you should progress with this. So this is something you have to find out yourself. It depends highly, of course, on what scalping system, what day trading system you are using out there. But in general, you can say like the lower the volatility is, the less the higher the sensibility of your day trading system should be. So in my case here, I could, for example, say, hey, there's not so much going on right now in Bitcoin. Let's say it drops further here, and suddenly you have a volatility of 3 or only 2% per day. So I'm going to lower the entry barriers where I trade those signals down to 60 for short signals and up to 40 for long signals, for example. Totally valid. And this is, by the way, also a problem, in my opinion at least, that like all those people out there don't address, that always like to test trading strategies. So sometimes you have channels out there, that test trading strategies that say like, oh, I took this strategy and I back tested it over 10 years and it didn't win money. Well, of course it didn't win money, because you have to adapt your trading strategy to what the market is doing, actually. So if we are in a low volatility setup, I have to adjust my trading strategy to it. If the volatility setup is higher, I have to adjust my trading strategy to it. If we're in an uptrending market, I cannot use a trading strategy that is, for example, for a sideways going market. So it becomes, of course, rather complex there. And I understand that a lot of trading beginners are confused by this. But as a rule of thumb, what I can really tell you what you should do is, when you think about trading a market, when you think especially about day trading in a market, look first at the volatility, then maybe draw your support and resistance lines in here into your chart as well, and then determine, is this a high volatility setup at the moment, or is this a low volatility setup? if it is a high volatility setup, maybe you should just trade the super premium signals. If it's a low volatility setup and you still want to trade, yeah, nobody's of course keeping you from staying at the sidelines of the market. Then you maybe should lower your entry barriers at least until a certain point. Of course, it doesn't make sense if your trading system then gives you signals that are worth like 20 or 30 or $40 of a Bitcoin move, because obviously then your trading fees, even if you use the promo code VEROOM, are going to be higher than what you can earn by the end of the day. All right, so a lot of talk here from my side. Let's see if we have any questions here. Let me go through here. What is that? Let's see here. All right. Wow, a lot of stuff going on. Question here from Jangoli. When volatility is high, which altcoin trades mainly except Bitcoin? So I assume you probably are asking what altcoins to trade besides Bitcoin. This is, I think you need to look at the volatility for every single altcoin, then decide like for that altcoin what you're doing. So there's no general guideline saying like, okay, volatility is high, altcoins are better, or if volatility is low, then Bitcoin is better, for example. This is a really good question, in my opinion. In addition to detecting patterns, what indicators can we combine to detect explosions in high volatility with crypto without going against the explosion? You cannot do that. You will not be able to detect a rise in volatility or an explosion in volatility. So when volatility, for example, goes from 4% to 15%, you're not going to be able, because those events are usually triggered by economic events. So, and we just had an example of that last evening. So last evening, after 10, Tesla received its earning reports, and within this earning reports, they revealed that they sold 75% of their Bitcoin holdings for US dollars. They wanted the US dollar cash. And of course, this caused some turmoil on the cryptocurrency markets, especially in Bitcoin. Volatility in Bitcoin for a time period went up again. But this is something that you, as a trader, cannot anticipate, except maybe you know already upfront what Tesla is going to release there. So as day traders, we have to really work with what we are seeing and what we know, the data we know. And the data we know is this average true range, really, which is like below 6% at the moment for Bitcoin, for example. So this is what we have to work with. And from this, we have to determine, is this a high volatility for this asset, or is this a low volatility for this assets? And then we have to take our conclusions from that. Another question here. We know that volatility is high during the opening and closing hours of the stock markets. Absolutely, yeah. Can you tell us about the situations that may cause unusual volatility that we should be aware of when trading? Yes, you should every Monday morning have a look at an economic calendar, and you will find one, for example, here on TradingView as well. There are other tools as well, which will show you like which economic events are coming Up here, you can filter by importance, for example, as well. So normally the ones with a red dot here are more important than the one with lighter dots. I think I filtered here already for high importance. And if you see something coming out there that has that is really, really important, and I'm thinking here, or especially at the moment of inflation data. I'm thinking of interest rate decisions like we had today in the Eurozone, when the ECB raised the interest rates in the Eurozone by 0.5%, which was higher than the expected 0.25%. So you want to look for stuff like this. And when you want to, maybe if you're really a scalper, so if you're really aiming at holding trades for 5 minutes, 10 minutes, half hour, an hour maybe, these are the events where you might want to stay out of the market, because these are the events that are going to change the volatility landscape. There's a lot of repositioning always going on there. We saw that like crazy again when the US inflation data came out. I think it was on the 12th or 13th of July. Today was a bit of a non-event. The ECB, despite raising the interest rate more than that was expected, but stay out of the market, wait for half an hour, and then entry again, and then start over again by determining, okay, how did this really affect volatility by the end of the day? Could you tell us a few best strategies that can benefit us in high volatility markets by minimizing the risk? Well, I've shown you one here, which is called the RSI hook strategy. There are some videos covering this also on the channel here of the PrimeXBT Trading Academy. So I think check them out and see if this is something for you. Definitely is something that works in a high volatility environment. If volatility is too high, by the way, that also would mean better, stay at the sidelines. When the markets go totally crazy, there's no trading system in the world that can show you where the top and bottom is going to be. Yeah, that is also good here. Why is the cryptocurrency market so volatile in this period of the year? I wish I knew an answer to that. In general, we are seeing here, let me make myself a little bit bigger so you can actually see me like this better. So in general, we always see this 4-year pattern of cryptocurrency market movements or Bitcoin movements, which is always a flat phase, where a so-called accumulation pattern. Then we have a bull run where everybody is going crazy, and then something happens that cryptocurrencies drop a lot again. And this time, what happened obviously was the disaster with Terra Luna and Terra US dollar. Then we had crypto hedge funds like Arrows Capital, what are they called? Two Arrows Capital, I think, going bankrupt, Celsius Network, which caused a lot of traders, a lot of people out there who were also new to the crypto sphere, lose a lot of money, and which is of course tragic. But yeah, this is what happens, and this reminds me a lot of what we saw, for example, in internet stocks back in the 2000s, where you always have this boom and bust movements. The good news is here, if you are a believer in cryptocurrencies, if you are a believer in Bitcoin, especially that is, then those times where the cryptocurrencies are falling are the times where you should buy, because the true money is made in the bear markets, not in the bull markets. And the true money is made by the people who bought when nobody else wanted to have those cryptocurrencies, and then sell later when they rose by hundreds of percent, or in some cases even thousands or 10,000s of percent. So I'm just going to read through here a lot of questions. If your question wasn't answered, by the way, please leave us a comment underneath here as well. I'm going to answer your question here on YouTube as a comment as well then, of course. So please don't think, that you've been forgotten. Leave us a like and subscribe, of course, also to our channel. That would be much, much appreciated. Here, question: what do you think of Bitcoin's recent movement? I think it's just a storm in the water glass, so to say. And I want to show you. I don't have it open here. Sorry, I cannot show you this today. I did before. I have something. I did this video a couple of days or weeks ago about the so-called Bitcoin logarithmic regression, which shows that at the time of the next halving, the fair Bitcoin price should be somewhere between 40 and 50,000. So until then, Bitcoin is going sideways, sometimes up, sometimes down. But we need to make sure that we, at the moment, do not mistake something like a rise to even 30,000 in Bitcoin, that a new bull market is starting. So use your mouse wheel here, zoom out a little bit to, get a broader perspective. I'm expecting Bitcoin to move sideways in a broad range, which is somewhere between 15 and 30,000 US dollars until earliest November 2021, maybe first quarter of 2022, when we are probably going to get a little bit of an upswing again, maybe something to 40, 50, maybe even 60,000 US dollars. And then we are going sideways or down again until the next halving. I think this is a super great question. Thank you for that. And just one second. And the good thing is, the very simple answer here is you do not deal in a different way when you have a big wallet. So by the end of the day, it does not really matter if you have $1 million US dollars worth of cryptocurrency in your wallet, or let's say 100 US dollars worth of cryptocurrency in your wallet. That shouldn't matter for your trading strategy, at least. What it matters, of course, is that, and I understand that completely because I've been there myself, also is like that you might be asking yourself, okay, why should I trade if I just have 100 US dollars? I cannot make a living out of that. And this is absolutely true. You either need to do crazy risk, to get up to an amount of money that maybe you can live off every month. The good thing here is nowadays there are tools out there, for example, PrimeXBT, copy trading, where you can open your own copy trading strategy and you can, trade your own strategy with very little money. And if you are successful, people will automatically follow you and you'll get money from those peoples every time you close a profitable trade. And you'll also automatically build up a track record, which then later you can present, for example, to other investors out there. And I mean, if you would approach me, for example, saying like, hey, Dirk, I've been trading now 2 years, I've been profitable, these are my risk metrics, I've done it with a lot of money, but I've been doing it very diligently, and I've maintained a lot of profile. Also, I've watched my risk metrics. I wouldn't care really if you did it with 500 US dollars or if you did it with 500,000 US dollars. If your risk metrics are good over a certain amount of time and you can prove like I'm earning money with this, then you automatically find investors. So this is the way you should go. Try to treat your wallet as if it is a big wallet. Maybe use copy trading, create your own strategy there, and then build up a track record, which later on you can present to investors. This is how I started as well, until I collected enough money, to trade this, to live off that, and eventually just, continue to trade my own money. Oh, so many questions. Thank you, guys. Super nice. I'm just going to scan through them right now. If I don't answer your question, please do not be sad. That doesn't mean your question wasn't important. Every question is important, obviously. And leave a comment here underneath the video then again, and I will be very happy to answer your question anyway. Even if I didn't cover your question here, that doesn't mean that you didn't enter the sweepstake, of course. Yeah, that's great. I think I covered this a little bit earlier already in a question. Is there a way to predict incoming volatility either on the upside or downside, or is it just all a waiting game? I seem to always miss volatility. Yeah, everybody does, because volatility comes always from events that are unexpected. So it can be either an economic number that was better or worse than expected, or like yesterday evening again, suddenly people see, oh, Tesla has been selling Bitcoin, 75% of their Bitcoin holdings. That was unexpected. So volatility always comes from something that the market is not expecting. And because it is something unexpected, of course, it's hard to forecast that. And there's nothing really we can do to forecast it, except maybe, I don't know, steal the earning report of Tesla prior to release, maybe. And it's a waiting game, a little bit at least. And that's why I said you might want to stay outside of the market if you're trading the short time frames. If you know there's an event coming up that could cause a lot of volatility, for example, the release of inflation data, which is like the thing at the moment everybody's looking at, including myself. All right, maybe two more questions. Yeah, here I like this question too. Do you think that the actions of great whales are to blame for this volatility? No. Very clear no from my side. I think blaming whales that supposedly, gamble the markets just to lure us retail traders in traps where they can take our money is, that's a conspiracy theory. That's like saying there's somewhere a shadow government that is planning a new world order that nobody's aware of, and they've done so for thousands of years. And it's just something that is not happening. And especially if you look at who are the whales on the cryptocurrency markets. The known whales, of course, which usually are cryptocurrency exchange wallets, like, for example, from Coinbase or Binance or PrimeXBT. So these do not affect really the market because it's money coming in, money going out. Then you might have like big market participants like Saylor, for example, MicroStrategy, but those known big market participants tend to be Bitcoin maximalists that are not shy of sharing their opinion at any given moment in time that you should buy Bitcoin and should buy more Bitcoin, and that you should only buy Bitcoin. And the ones that are more in the shadows, in my opinions, are the ones that were bigger miners very early on in the game. So I'm talking about 2010, 2011, maybe even 2012 still, that had mining rigs there that were able to mine a couple of thousands of Bitcoins. And those people are usually, at least in my opinion, I don't know anybody personally, of course, from this scene, but that came to Bitcoin because of an ideology, because they thought Bitcoin is going to be the new world money, the new world currency, so to say. So they are very tech savvy. They are driven by ideologies like that money should be not controlled by a central authority. So they don't really have a drive to use the amounts of cryptocurrencies of Bitcoin that they accumulated to steal money from other market participants, to steal Bitcoin from other market participants. On the contrary, they probably like it very much when more and more market participants are coming in there that want to have more Bitcoin, and so it becomes more widespread. So whenever you see something out there, and I know this is especially popular on Reddit, this is especially popular on Twitter, talking about whales manipulating the market, it is just not true. It's not true, but somehow it's something that's always there on every market that I've been trading throughout my decades. Okay, last question. Let's see. Okay, here, more general question. What do you think of the current economic and financial situation, and how can it affect the crypto markets? And I think this is a good note to close today's live stream on. I think, of course, we are in a horrible, horrible situation globally at the moment. We're having a war within Europe, so to say, raging at the moment, which affects all of Europe, not only just all of Europe, the whole wide world. Economically, we've seen the high inflation rates. We've seen the potential dangers of war breaking out in other parts of this world as well. I'm thinking here China and Taiwan, for example, and which is a possibility, of course. And this is, of course, affecting the crypto markets and the stock markets. However, there's one thing you have to take to the heart when it comes to stock markets or risky assets in general, and cryptocurrencies are risky assets. Stock markets or risky assets front run the economy. So when you see economic indicators that show you like, oh, there's a recession, there's super high inflation, there are all types of crazy things going out there, you can be pretty sure that the stock markets and the crypto markets have priced that in already. And I'm super, super sure and confident. I'm not saying 100% because I don't want to raise false hopes here. But I think once we see inflation ticking down by just a little bit in the USA, so let's say it goes down from 9 whatever percent we are at the moment to 8% or 7.5%, we will have seen the bottom of the stock market already then, or this will be the bottom of the stock market. And I'm expecting this to happen earliest somewhere maybe October, November, December 2022, maybe the first quarter of 2023. And everybody then will be still talking about how bad things are still for themselves. And they are. I mean, I see it with my grocery bill as well, you know. Like when I buy a bar of butter now and it's at a special price, it's like €2.99. The special price a year ago was like €1.29. So it's crazy, of course. And if you have a low income and every euro counts or every dollar counts, of course, it's horrible for you. It's like wreaking havoc on your family expenses, your grocery expenses every month. But as it always is, you know, like I just said, the stock markets, the crypto markets are going to front run reality. So we are probably going to see rising stock markets, rising cryptocurrency markets again, and then suddenly we'll see that the economic data changes for the better as well. That is, of course, if no other black swan events comes along the way. So if we really have a situation like, for example, where China attacks Taiwan, and we have basically something like a World War III scenario, of course, things are going to be very, very different. But it's never good to try to trade on events like this. So let's hope that doesn't happen. All right, good. My God, so many questions today. Thanks a lot, you guys. It was a pleasure again to share this with you today, to have this webinar. Remember to leave us a like, please. Subscribe to the channel. And I'm going to see you actually tomorrow again with the next episode of our crypto trading crash course. Until then, also remember, write your question in the comment here underneath YouTube. I'm going to answer this, of course, again. See you soon again. Take care.